Is John. I am part of the team at cryptowithus.com. And this enterprise, just getting going, is going to be one that is an educational enterprise, an attempt to educate many of you. Some of you may be very familiar with the space. Some of you may not. And we're talking about billions of people around the world, many of them who have a keen interest in cryptocurrencies and blockchain and Bitcoin, as well as they should, because we're talking about underlying technologies that are really going to transform the way the world does business over the course of the next several years, decades, and maybe centuries. I really believe that. I think that some of you who've been alive during the time frame from the 70s, 80s, 90s, and then transitioning from the 90s into the latest industrial revolution that was ushered in by the internet, you certainly will remember back to how transformative the internet was. I'm certainly very familiar with the space. I'll give you a little bit of a background on me so that maybe you wonder who the heck this guy is that you're listening to right now, and what are his bona fides. And I can't sit here and say I'm going to help make you into a cryptocurrency millionaire, because I'm not one myself. But I have been paying a lot of attention to the space for the last 7, 8, 9 months. I have certainly made purchases in cryptocurrencies, and I'll tell you about those shortly. Just sort of a portfolio sharing that I think it's important to be transparent before you talk about things. None of what I'm going to say should constitute investment advice. Certainly on the micro level, I will have some macro assessments, but ultimately your decisions are yours. You should only invest with what you're comfortable losing, all of it. That goes for whether you're doing investments in cryptocurrencies or, in my opinion, the stock market, because I don't really see all that much difference as long as you're an informed investor, or as informed as you possibly can be, any place and anywhere that you choose to invest your hard-earned dollars. One of the things that I've done for the majority of my career, my professional career, I've certainly talked for a living throughout most of it. I've been a sports talk radio host. I've had a national television show on the Big Ten Network. Most of the time, however, I've been an analyst of some sort, some way, shape, or form, involving a great deal of analysis, whether that's analyzing the game, communicating on TV why this team won, why this team lost. In the mid-90s to the early 2000s, I was also in the energy industry, focusing on propane. Got back into that in 2013. I remain in that to this day. And ultimately, my job in that field is to sell people gas. But how you arrive at selling something to someone really stems from one key component. You can't sell anything to anyone, whether it's a product, tangible, or an idea, intangible, or a confidence in you, which is also intangible, somewhat tangible. You can't do any of those things unless you first convince people that you're worth listening to. So that's why I kind of want to go into a couple of things here quick before we talk about Bitcoin, cryptocurrencies, bubbles. Are we in one? Is this one, or is it not? I mentioned that I was in sports analysis for a number of years, and then I started in energy analysis in 1996, got into sports, did that for a decade, built up my own brand, my own company. I had a brand that has received nearly 1 billion page views on a website that I began in 2001. I built multiple social media platform brands to over 40,000 followers in the sports world. Then in 2013, I chose to get back into the energy world, taking some of the things I learned from my time as a sports blogger, which began in 1999, right before the tech crash of 2000, October of 2000. I was a part of all of that. The company I was working for at that time, Rivals.com, those of you who are familiar with sports and collegiate sports in the United States, football recruiting, basketball recruiting, that name's probably a familiar one to you. I was one of the original bloggers at Rivals.com version 1.0 back in the late 1990s. Then the dot-com crash happened in 2000. And there were a lot of people at that time, some people that I actually worked with and for, who were pointing out, see, this internet thing is a fad. It is a passing fancy. We told you this was a bubble. We told you this wasn't going to work out. One of the companies I was aligned with at that time published a bi-weekly magazine, a physical, tangible magazine on a sports team that I was covering via the website that was a partner. I came to them and said, I think we need to bundle the website and the magazine together, basically make it seem like we're giving the magazine away for free and focus on a macro level subscription value. That was met with great resistance because everyone at that time, and this company was owned by the Weather Channel money at that time. So these weren't just, local yokels. They told me, looked me in the eye and said, John, thanks for sharing the idea, but excuse me, the internet is going to come and go. The magazine has always been here and it always will be. I tendered my resignation about a month later. I didn't want to be aligned with that type of thinking. And then in April of 2001, I began independently publishing my own thoughts, analysis, and ideas at the website that I started. And it's still in existence to this day, some 17 years later. And that brand that I built has generated nearly in excess of $1 million for my family through that time. Now, I'm not going to sit here and claim to be a flush with cash multimillionaire. I'm just telling you, building a brand on the internet at a time when the internet was crashing and everyone was pointing out, this is a fad, this is a bubble, this won't work. I didn't really see it like that, and I stayed in it, and it certainly has paid dividends for me and my family through the years. And so I stayed in the space. So I've been a part of the internet space since it really began commercially back in the late 1990s. Of course, the internet was available before then. The internet was being used commercially before then, but it really didn't take off and move up to the right on the hockey stick until the middle of the 2000s, really, once that space began to recover from the crash. And make no mistake about it, the crash was significant. It was painful. A lot of people felt pain. I mean, you may or may not remember pets.com. What a great URL. It's 4 letters long, says what it is, selling, pet supplies, pet food, this, that. Received a ton of venture capital investment, and it went belly up. And at that time, one of the survivors of the space was Amazon.com. And really, to say they were one of the survivors of the space is not really telling the whole story. For a number of years, Amazon.com was the brunt of many jokes. Well, this is a company that shows, their fourth quarter loss was much better than last year's fourth quarter loss. This company continues to not make money. They continue to bleed money. They continue to lose money, but yet they're continuing to get into more and more sectors. They're moving from books into materials, into foodstuffs, into household goods, et cetera, et cetera. But we all know how pervasive Amazon is today. Many of us wish we could go back in time and buy Amazon stock circa 2001 and 2002, but haven't been able to build that time machine just yet. But I believe that the opportunity to take part in, I don't know if you want to call it Internet 2.0 or what, the next extension, and I think another revolution with regards to technology, which the internet is certainly a part of. Without the internet, blockchain, the concept of cryptocurrencies, the concept of peer-to-peer digital exchange of currency value goods couldn't happen without the internet. So the internet is a big part of this, and I think that blockchain is therefore an extension of all this. So another brand that, so I left the sports world. By and large, I still dabble in it a little bit, and got back into the energy sector. And I took a lot of the things I learned from the sports world, brought them in to an energy marketplace that was doing things the same way they were doing it when I left it in 2003. So I brought in a disruptive type of marketing approach into a very stagnant, static business model for the last 5 years, and it's worked extremely well for me in that genre as it did in the sports analysis genre. So cryptocurrency, that brings me to here. Again, I'm not saying that I've just given you enough reasons that you can feel certain that I'm worth listening to or not. I think over time, if you subscribe to our channel, Crypto with Us, here at YouTube, you can then come to judge for yourself whether or not we're a resource worth listening to, a resource that is educating you and isn't asking you for anything. www.cryptowithus.com is where you can see some of our blog posts. And again, at the recording of this, we've got 6 or 7 there. We're going to do at least 1 or 2 content items per day. So if you're watching this, say in March of 18 or April of 18 or somewhere down the line, you go to the website and you'll see that it's flush with content. And hopefully it can be a good resource for you, because you need to grasp and understand what the crypto space is. Cryptocurrencies, blockchain. The first thing I wrote on Crypto with Us is, what is blockchain? You need to have a good fundamental understanding of that. It was the first video that I recorded here at our YouTube channel, because it's very, very important. A lot of people are getting into the space, which is going to lead me to the answering the question of, is this a bubble? And if it is the bubble bursting, or is it not? A lot of people are just getting into cryptocurrencies because of what they've seen in the news, of what they've heard from Uncle Pete. Uncle Pete decided to take a flyer on Ripple XRP back in October. I wish I was Uncle Pete, actually. I told my wife that I wanted to throw $500 at Ripple just for the fun of it. We decided not to. Christmas was coming up, and want to try and stay within a budget and be disciplined, teach your kids to be disciplined financially. So sometimes that means dad needs to do the same thing, even though he doesn't want to. And then, of course, Ripple blew out to over $3, and I could have kicked myself in the shins. But you can't look back, and you can't beat yourself up in hindsight. But a lot of us probably know an Uncle Pete, or somebody that did something that worked out really well. My first cryptocurrency purchase was in May of 2017. I bought Ethereum at at $234. I sold it 2 months later, somewhere around $315, $330, and felt good about that. Obviously, that's a pretty good return. You would take a 33% return over the course of 2 months in anything. And I still wanted to stay in the space at that point in time. So then I made an investment in Litecoin. I will say the reason I invested in Ethereum is because I love the underlying technology behind Ethereum. I love the efficiency of that technology. And I feel the adoption of Ethereum-like technology had a pretty good chance of sustaining and surviving. And that's why I bought it at that time. I wish I would have not cashed out. Litecoin for me was a pure speculative play. I really didn't know a ton about it, but I just felt that what I had read about it, that there could be an opportunity for a return. So I bought it at $69. I sold it in September of 2017, and I sold it in December of 2017 for $315. And recently got back into the space, invested in an altcoin called VenChain or VChain, depending on whatever you want to call it. I think that it has some opportunities based upon relationships that I believe the purveyors of that coin have with the Chinese government. And that's pretty key there. And also I stepped in again last week and bought some more Ethereum. Now I'm upside down on the Ethereum and the VChain as well, but I'm into these for a little bit of a longer play as opposed to spec plays, more of a fundamental investment play. And again, what I'm doing I am not intending this to be investment advice for you. I'm just giving you examples of where I'm involved, how I'm involved, so you don't think it's somebody that doesn't have any skin in the game telling you what you should think or the basis for what I'm saying. I think it's fair. So after all that explanation, so I don't ever have to do it again, I can just point people back to watch this video if you want to learn more about me. We never have to go through that painful process again. After all of that, a question that you're hearing everywhere in the news, from friends at the water cooler is, or maybe not a question, things you've heard in recent months, Bitcoin's a bubble. Cryptocurrencies are a bubble. They're a passing fad. You're going to lose your money if you get involved in that space. You should just put it in stocks. I have someone very close to me who is a financial advisor, a very successful financial advisor. And recently he was talking to one of the biggest hedge fund managers in their very prominent company. And the hedge fund manager said he wouldn't touch cryptocurrencies with a 10-foot pole, and he'd stay the heck away from them. And I'm thinking, I'm not going to say I'm an anarchist, but I certainly don't just take what people say always at face value without looking into them myself. And I'm thinking, okay, he's a part of the machine. He's a part of the culture for which blockchain and cryptocurrencies, eliminating middlemen, things of that nature would be very disruptive. And I talked earlier about, my trying to be a disruptor, taking things I'd learned in one genre, applying them to another genre, and how that's been disruptive. And I'm doing things differently than in the way that anybody else is, and it's being successful for me. It's similar to what I think you see a lot of times with the news cycle, with what gets discussed on the nightly news, with the topics, the decision to make the topics. And I've spent a lot of time in media, was a member of the media once, so I kind of know how that sausage is made. And I see conspiracy that's probably too strong of a word, but I'm going to use that term so that there'll be no ambiguity what I'm talking about. I see a lot of conspiracy at times behind, what's being driven in the news cycle. And, it's not conspiracy to say that governments are in bed with big finance and big banks. We know that to be a fact. The 2008 financial crisis and crash in the United States, that's really what helped spur on the blockchain / cryptocurrency revolution that has begun. That was, the shot heard around the world, really. Satoshi Nakamoto, whether it's a person or a group or whomever, shortly after that happens in 2009, that was January 3rd of 2009 when the first Bitcoin block was mined. And that all stemmed out of the financial crash and the desire amongst the cypherpunk movement to form a currency, a deregulated currency, a peer-to-peer currency, so that middlemen couldn't screw up your lives anymore. And that was really the, kind of the fire behind it. And there were other cryptocurrency type programs, codes, etc., developed before Bitcoin. Certainly there were several of them. But Bitcoin really, let's just say it's benefited greatly from the first to market phenomenon. First to market, the first company that can get a product that people are interested enough in or confident enough in, you get that to market first, and you typically enjoy a long-term market share advantage because you were there first. And sometimes your brand becomes synonymous with the genre. A lot of people, when you say Bitcoin, they may not be talking about the specific currency that is Bitcoin that Satoshi Nakamoto made. They may just think Bitcoin is like, oh, all cryptocurrencies. It's like, hey, I need to wipe my nose. Will you hand me a Kleenex? Well, a Kleenex is a facial tissue. All right. Facial tissue's a genre. Kleenex is a brand. Bitcoin is a brand. Cryptocurrency is a genre. But since Kleenex had such a dominant market position, you say, give me a Kleenex or give me a Coke when you might mean you want a 7-Up or something. It's just synonymous for a pop or a soda, whatever. And the Bitcoins really enjoy that. So that's why often, in addition to Bitcoin's market cap size, what happens with Bitcoin either lifts or drags down the rest of the space, which leads me to the bubble commentary. Is it a bubble? Is Bitcoin a bubble? Is cryptocurrency a bubble? All right. Go and Google what is a bubble. Go and Google the tulip bubble from, was it the 1600s or 1700s? You can find several examples of bubbles. Many of you who have owned mortgages over the past 15 years, there was a housing bubble that helped usher in the financial crisis of 2008, where housing values just got out of control. Values were soaring and soaring. They were unrealistic. There was a bubble in the late 1920s in the United States stock market that helped usher in the Great Depression. So there are bubbles. I'm not saying that a portion of what we're going to see in the cryptocurrency space won't be bubbles. There will be a lot of coins that you're aware of and familiar with right now that won't be around in a year, that won't be around in 2 years, 3 years, 5 years. But there will be some. It's like pets.com didn't make it, but amazon.com did. Now, which of those coins, excuse me, I need to take a drink of water. No, this is not sponsored by Perrier. So I should have remembered, put a bookmark in my head where I was talking about. So I think that you will see more pain, right? And here's the reason why. Here is the reason why you're seeing the pain. Because at this point in time in history, and I'm recording this on February 3rd, 2018, cryptocurrencies are incredibly thinly traded. They're very thinly traded. My day job, I work in an industry, in the propane industry, where that energy, if you will, that commodity is very thinly traded. Now, there are a lot of gallons of propane that get consumed in the United States on an annual basis for home heating, for petrochemical consumption and making plastics, etc., and a number of other different things, cooking on your grill at home. A lot of gallons get consumed, but nowhere near the amount of gallons as crude oil. So propane is a thinly traded market compared to crude oil. So if somebody comes in and, a large multi-state home heating company comes in and they need to buy a lot of gas to cover gas they know they're going to need for the upcoming winter. And they decide to come in today and they buy half of their needs for the whole winter. That is going to move the market up quickly because it's so thinly traded. You're going to see that continue to happen in cryptocurrencies. You're going to see that happen in blockchain. And even though blockchain at this present time has the largest market cap, it's still larger than Ethereum, although I wouldn't bet against a flippening happening at some point in time. And we'll talk about what that is. I wrote an article on cryptowithus.com about what is the flippening, but we'll talk about that more in some upcoming videos. Right now, Bitcoin enjoys the largest market cap. But still, when you consider how many people around the world are interested in this space, are in this space, versus how many will be, it's a thinly traded, emerging, nascent marketplace. Therefore, I don't want to sit here and say that it's predictable, because if it was, I wouldn't need to be recording a video here. I would have already, well, I probably still would, because I enjoy doing these things. I enjoy talking about things like this that I'm interested in, but I would have made a lot more money and put a lot more money into it. But in the trading world, you can trade based on fundamentals, which is supply, demand, inventories, etc. And you can, I'm a fundamental guy. And I think 6 to 7 times out of 10 in the industry I'm in, I'm going to be able to somewhat predict what's going to happen on the macro level. Like, I think things are going to rise at this period. I think things are going to rise over this point in time, this time span. Or I think they're going to go down. And I'm going to be right more than I'm going to be wrong, because fundamentals are a very valuable tool. But there's also another type of trading, a technical trading, where folks spend a lot of time looking at charts, looking at the historical performance of charts, looking at historical analogs of things that have happened in the past. When certain things happened in the movements of markets, they tend to happen again. I don't think those who rely on technical charts will not like me saying what I'm about to say. I think technical charts are self-fulfilling prophecies. I think we have over a century's worth of research, a century's worth of performance in the stock markets, to which people can go back, plug all of those results into computers, and they can create certain shapes or whatever behaviors. Okay, when the last time we saw conditions like this, the market did this 65% of the time. So okay, we got a head and shoulders breakout coming up. I think that means we're going to go lower, or we're going to do this. We got a triple top, blah blah blah. All these stupid things that they ascribe to what they're talking about. So this is why this is going to happen. If you ever turn on the Squawk Box and things like that, you see technical charts all the time. And a lot of the websites you may go to look at cryptocurrency prices, you see candlestick charts and all that, and most of you have no freaking idea how to read those. No offense intended, but you just don't, because they're not easy to read. And if you have a decent, you can go there and say, okay, that's US dollars. That's what Bitcoin is against US dollars. That's not being able to read a chart. That's just saying, okay, here's what's happened. That's just looking like, okay, yesterday, let me go to the weather.com. Okay, the weather was 74 degrees. That's what it is when you just look at the history of the chart. Technical traders look at those things and they plug them in, and they see historic analogs to when the last time a chart looked like this. Therefore, they go out and make their predictions based upon they think it will happen again. Okay? And that's why I think technical trading is it's certainly a force to be reckoned with. And I'm not saying there is value in it, only because so many people have given it value. So many people believe that, okay, I'm going to live and die by the technicals. Here's what I'm seeing. That means this is going to happen. And they make their purchases or give their advice based upon that. And if enough people believe the same thing, that's what's going to happen. That's how it becomes a self-fulfilling prophecy. Sociology is really what's at play here, and understanding human emotions and human behaviors. I can't predict how you, specifically you watching this, I can't predict how you're going to behave. But I can, if I study sociology and I study behaviors, etc., I can predict how 100,000 of you will behave in a macro way. It's very difficult to predict the individual the individual person's behavior, but it's much easier to predict the hive mind, to predict the masses. And really, you only need to be right 55% or so of the time, be wrong 45% of the time. And as long as you're trading evenly over that time, you win. So I think that the chatter that you hear a lot in this industry from technical traders, that has an ability to move the markets a great deal. So is that a bubble? I don't think it's a bubble. I think that those are emotional and, research, technical, whatever. That's how trends happen. That's how things move. So right now, it would seem as though the cryptocurrency space, because of Bitcoin by and large, is in maybe, entering bear market territory. And a bear market means, things aren't good. The downside, the bottom hasn't been reached yet. And a bull market's the opposite. A bull market's the sky's the limit, which is what we've kind of seen in the Bitcoin and crypto space for most of the last 18 months, really. There's some profit taking going on. Another thing that you need to understand, especially in a thinly traded market, is who are the ones that are buying and selling the Bitcoin. Now, there's a lot of mom and pops. There's some people that were going out, and we've all read stories on this, that were making Bitcoin purchases on credit cards, that were taking out second mortgages on their homes to buy Bitcoin or cryptocurrencies. That is simply foolish, a foolish thing to do. Because if you're putting it on credit cards, you can't afford to pay for it in cash. And if you're taking a second mortgage out on your home, you probably can't afford to pay for it in cash. And as I said earlier, almost with any investment, any specific investment, as opposed to mutual funds, you just ride those out. Like your 401k is a time thing, and over time, you're probably going to win. But any purchase that you make specifically one-off or in a risky space like cryptocurrency, you better be prepared to lose every last cent of it. So there probably is more pain coming in Bitcoin, but that doesn't mean that the Bitcoin bubble is going to be akin or synonymous to what happened with the tulip bubble or other bubbles throughout human history. It doesn't mean that. Was there likely a pullback in store for the crypto space? Absolutely. Most everyone I know who dabbles in it or is in it seriously and for, a good majority of the time of their day, every day, they felt that a bubble was coming. I know many people who transferred their funds in and out over to safe havens, back into US dollars, or into what they felt was a more safe. That's why I moved a lot of my positions into Ethereum, because I looked at the performance of Ethereum in January versus the performance of Bitcoin and other cryptocurrencies. And Ethereum on the month was higher. Bitcoin, I think, was off 25% Jan 1 to Jan 31. And the other three largest market cap cryptocurrencies were off 45% at least, 35, 45%. That's amazing volatility. It's because it's a thinly traded market, and it's going to continue to be a thinly traded market. So expect more swings, expect more wild swings, and expect more headlines from the nightly news or all the websites that are looking for clickbait. Oh, that this is the end. This is how it all ends. See, we told you so. And a lot of people who want to say we told you so are people that aren't in the space. They're talking their position, another term in trading. If somebody's long, if somebody has loaded the boat and taken out that second mortgage on Bitcoin, what do you think they're going to say to their friends or on social media? They're going to say, oh, it's going to the moon. Sky's the limit. It's going up. Because they don't really want to think about if it goes down, because that's painful, real pain. Because if it goes down, they could lose their house. Or if it goes down, they're paying $10,000 on a 20% credit card for who knows how long. The human psyche doesn't want to accept that. So, of course, those people that are long, that have taken a position in cryptocurrency, they're going to be more exuberant or more optimistic or more positive about the space. Some of my friends that are watching this right now who are bears, I've got one friend that I have dubbed the crypto bear. He may be watching this right now, and he may be saying, John, you're talking about yourself. I am. I admit that. The reasons I got into the space wasn't because I thought Bitcoin or Ethereum was going to go to 200 double or triple or quadruple, which I certainly wanted that return. It's because I believed that we're seeing the next evolution and revolution in the internet. And I think that we are. So, Ginger, no thank you. Come here, Ginger. Come here. Come here. Life happens. Hey, come here. So, what you have is Bitcoin may come or go. All right. Ethereum may come or go. The currency that you're in, it could go to zero. It may not. It may stay. It may go, have 100% increases. But the thing is, the blockchain revolution, the underlying technology behind the cryptocurrencies, which is blockchain, it's going nowhere. It's going to be with us probably for the rest of our lives. I'm 46. It's going to be here for the rest of my life and well beyond. It's going to disrupt multiple industries, the way that Amazon.com has, the way the internet has, the way the internet destroyed small town Main Street American dime stores, the way the internet has destroyed a number of box stores, the way that the reason why you're seeing shopping malls close all over the country, because Amazon brings things to our houses. We get a package from Amazon nearly every single day at our house. My wife purchases a lot of things through Amazon that normally we might go to the store for. And now we really don't want to go to the store. There's certain brands of stores we certainly don't want to go to because it's a hassle. It's a pain. You can return things on. Amazon's made it so simple. They are one of the most significant disruptors in the history of American commerce, all because of the internet. And of course, the vision of Jeff Bezos. Same thing with blockchain. Blockchain isn't going away. Is Bitcoin a bubble? Potentially. Are there bubbles within the cryptocurrency space? Absolutely. Meaning that the value will go to zero at some point in time, the way that it did for pets.com, but not the way that it did for Amazon.com and some other companies that were around before the 2000 crash, the tech crash. Those that survived it moved on after it, and those that survive become behemoths, right? So as I mentioned to start, this isn't investment advice other than I'm a big believer in cost averaging. Even if something is moving down, if you still believe in it, buy a little bit at a time. Don't put all your eggs in one basket, but certainly be prepared to lose everything you're going to invest mentally. And if you can't afford to lose it, then don't do it, all right? But blockchain is going nowhere. It's only going to become more and more pervasive. So understand and learn all that you can about blockchain. At cryptowithus.com, we're going to be here to help you do that, all right? So learn that and try and investigate and learn about some of the cryptocurrencies that you may have an interest in, and don't just wildly throw money at those things without having some, understanding of them. So no, I don't believe in the bubble theory ascribed to this space. Some coins will break people. Some coins will be here today and gone tomorrow. I can't tell you which ones. I certainly have my personal favorites, but that's a topic for another day. But the blockchain is going nowhere. The blockchain is what powers all this. The blockchain is going to change so many things. It's going to change the way that we bank. It's going to eliminate middlemen. It's going to put some banks out of business. It's going to change the insurance world. It's going to change the mortgage world. It's going to make it to where the mortgage process won't take 30 days. It might only take, 5, because of the efficiencies that, smart contracts can usher in, that right now humans, this guy's got to make his money. This guy's got to make his money. This guy's got to make his money. Anywhere there are intermediaries in finance or contracts, that is a marketplace that blockchain is going to disrupt. That's just one of them. And we'll talk about more of those in an upcoming video. The FITS model, FITS, we'll talk about that acrostic again. So for this first video, thank you for watching and making it through with me. As much as anything, this was a test run. Got a new camera, got a new light section set up. Next time we'll have the dog somewhere else, outside maybe. So I apologize about that. But Ginger says hello. And thanks for coming along for this ride. Hopefully it wasn't a ramble. Hopefully you felt like it was worth your time. Leave some comments if you would like, and I'll certainly reply to you if you have any questions or other commentaries. And subscribe to our channel, and then you'll be alerted to upcoming broadcasts. Going to try to do multiple live weekly videos over the Central Time Zone, United States lunch hour-ish time zone, do 15-minute videos on what's going on. Try to pick a topic du jour of the day that everybody's discussing and break it down a little bit more and just kind of have a layman discussion with you on this. I'm not going to, there's going to be other faces on this channel than just mine, other people that I'm working with on this project. And we're just going to be real dudes and talk about these things, because that's what most of you are. You're not day traders. You're not people that, have made a living in the trading space. You just want to know about this because you're like us. You see that this is going to be here for a long time. And we'll try and, break through and hash out or phase out, filter out a lot of the static that goes on, not all of it. At any rate, thank you very much for watching.